Be a trading optimist. Hi, it's Charlie giving you today's video. So, what do we mean by being a trading optimist? Well, trading gives people lots of knockbacks and setbacks. So, which anyone who's watching this will appreciate that the market is constantly challenging you. Yes, you have winning trades and all that sort of stuff, but there's also times when there's a great deal of uncertainty in your trading. You might have just gone through a drawdown period, a stretch of, wins and losses or just losses, whatever. So, how do you become a trading optimist? Well, the thing is if you are a pessimist, so if you allow the negative side to things in the markets to affect you, that's going to affect your ability to trade well. So, for example, you're going to have 5 losing trades in a row. You don't take that 5th one because it's a similar type of pattern or setup within your strategy or method. You don't take the trade, and then, of course, as a result of not taking it, let's say it goes on and becomes a winner, and you've just missed out on a nice winning trade. That's because your mindset has affected you. So what we need to do is check our mindset all of the time. And so I'm going to do is give you a couple of examples. So, for example, turning a negative into a positive. So let's say you're looking at your P&L at the end of the month or an end of a week or an end of a period. And let's say your P&L in this examples here is negative. So the P&L is negative over that period. Well, a way to turn a negative into a positive is to review all of the trades. And this is why you should always log all of your trades, because when you go back over them, you might have a load of trades over a course of a week or a month, and you say, yeah, actually, well, that trade there, I shouldn't have taken that one because actually I was, for whatever reason, I jumped into the market, whatever. But this trade here, although it ended up becoming a losing trade, it was actually only a few points in relative terms from my target. So I can take a positive from that. Yeah, it didn't hit my target, but I was doing the right thing. It was just a bit unlucky. And this one down here only just stopped me out. And actually, the market reversed and ended up going to my target. So rather than saying, yeah, but I got stopped out, you could see this two ways. Rather than saying, well, I got stopped out and only to go higher and be frustrated by that, turn it into a positive and say, well, at least my analysis was right. I was just a bit unlucky on the stop loss. If I took 100 trades like this, a load of them wouldn't have got stopped out. So again, turning a negative situation into a positive. So there's a lot you can do just by reviewing all of your trades, because you will see some trades that oh yeah, I shouldn't have taken that one. And then when you go through all this and you say, well, yeah, I shouldn't have taken that one, and this one was pretty close. Actually, you might find that the P&L, on the back of that, if you hadn't have taken that one and maybe another one in there, and maybe you mismanaged one, maybe you came out early on a trade, and actually, as a result of the review, it may be that the results could have so easily been positive just by reviewing what you've done and saying, well, all right, there's nothing you can do about getting stopped out and it carrying on, but what you can do is deal with it mentally and take a positive from it. And what you can do when you're reviewing is, say, oh yeah, if I hadn't have taken that trade there and maybe another one, maybe my results would have been a little bit different. And actually, even if we take this one, yeah, I was a bit unlucky there, and I was a bit unlucky over here as well. And then you start putting the positives there and you say, actually, the result isn't that bad. If you just focus on your P&L, then you're doing the wrong thing. You take the, of course, we're in the markets to make money, but we have to understand that we're not going to make money all of the time. And we should be judging ourselves by how we approach the market. Are we executing according to our plan? That's how we judge ourselves. So if you can go through your trading plan and say, yep, I've done everything right, great. That's how you judge yourself, because you can do everything right and still have a losing period, because that's just trading. It doesn't matter. Winning and losing is here nor there. That's the end result. but you could take exactly the right setups, following your trading plan, following your methodology, and still have a negative end result over a cluster of trades. So you judge yourself by, am I executing well? Because if I carry on executing well and following my plan, and I don't start banking my profits too soon, and I don't start jumping all over the place, over a larger sample of trades, the result will probably be very different. The problem for most traders is they don't do that, and they start jumping around, changing and tweaking their approach, and that's where it all starts to fall apart. So look at every negative emotion that you have towards the market and see if you can turn it into a positive. I'll give you one more example, and by all means put in the comments here today some other examples of how you can turn a negative into a positive. Let's take, okay, so we've got a chart up here. Let's zoom this in a little bit. So let's take this price action that's gone on here. So for whatever reason, let's say you're assessing this chart and you had you had intended to buy on this next pullback. Let's say the market, for argument's sake, I'm just making this up, had made a confirmed higher low at this point after making a high, after breaking this high here. So you intended to buy down at some point on this pullback, and for whatever reason you missed it, you were looking elsewhere, you were on holiday or whatever, you come back to it and you've seen the market go higher. Now, a typical trader reaction would be to get negative and be frustrated at having missed out on the move. Well, let's take that and turn it into a positive. So turn it into a positive, you simply have to give yourself a pat on the back and say, well, at least my intention was correct. At least my analysis was correct. So give yourself a pat on the back and say, okay, well, I missed out on this one for whatever the reason, but rather than allow myself to be frustrated at missing out on it, give yourself a pat on the back for, well, at least my analysis was right. And if I keep on with that kind of analysis over the next 100 trades, 200, 500 trades, there'll be plenty that I will take. There you go. That's just one more example there. So always try to turn negatives into positives, because otherwise you just become a statistic, like so many traders out there who get swallowed up by the negativity, and negativity affects your ability to trade as well as you can do. And on that note, have a wonderful weekend. I'll see you next week.